Yo, welcome back, guys. I don't want to make this video too long, but I want to touch over a trade. Basically, the trade that I was looking forward to for the following week, month, however long it takes to reach the very top or possibly an all-time high. Let's get right into it. So I'm gonna go ahead and erase everything. So looking at the daily time frame, as you guys can see, I don't know if in my previous call I touched on this, but there was a level of support that a lot of retail traders were getting into and basically waiting for the market to respect this. Obviously, you know, if you're an institutional trader, a lot of retail people are waiting for that pattern to either break or a break and retest or respect that area so it can keep going up and down and just keep creating that same pattern. A lot of people see this M pattern forming right here. But us as smart money traders, as institutional traders, we know exactly when to get in, when to get out. As you guys see, market swept all of those orders that were in those buy positions. So that's a good sign for us. So in the daily time frame, as you can see, like I said, it did break that structure. It did come down and break that support. Going down to the 4-hour, you can see clearly that the market is coming down in a bearish momentum, which is totally fine. That's what we want to see. But if you're paying real close attention, I like to use the line chart sometimes because it's creating those lows and those highs. The highs and the lows are usually formed when those candles close. So this doesn't go off of wicks, it goes off of candles. So like I said, I like to use the line chart so I can go ahead and see when exactly the market is creating those highs and those lows, so I can determine when to find my break of structure. So going back to the candles, as you guys can see in the 4-hour time frame, it's creating highs and lows. High, a low, high, low, high, low, high, low, came down, created this high. As you can see, it respected it, came down, didn't really come and create a low, but as you guys can see here, using my arrow, broke structure. So I was waiting for this exact moment to happen. Obviously, after it broke structure, it came in and it gave you an entry. I believe I missed out on this entry, but like we always touch on, every single body that's like experienced in trading this concept, you always wait for that reaccumulation, that second entry, because that's the one that you really want to look for. There's a smaller stop loss, bigger lot sizes are able to be used in those. So going down to the 1-hour, as you guys can see, it's consolidating, which is totally fine, but it's still coming down in that bearish momentum. So it's creating those highs and those lows, like I touched on. As you guys can see, it finally broke structure. That's what we want to wait for. And then as soon as we create that break of structure, looking at it from the 1-hour time frame, I mean, you can use your Fibonacci from the previous low to the most recent high. And some people go based off the 50%. Some people go based off the 786. I normally like to touch on the 786. Obviously, as you guys can see, it didn't really do that. But going down to the 15-minute chart, I'm just looking at it here. I'm not really doing anything. I'm just watching, paying attention, making sure that I am basically in the position that I want to be in. Obviously, if you guys look at it, you have a low, high, came down, or I mean, you can consider this the high. So low, high, low, high, low, high. right? So I'm not really looking at anything when it comes to the 15-minute. But I'm paying close attention. I believe this happened. This was this Friday, so it was the 28th. Going down to the 5-minute, as you guys can see, I was paying close attention to this area because let's go back to the 15-minute. As you guys can see, this is where that low got created. So if everything was going perfectly fine, it would have respected this area. And as you guys can see in the 15-minute, you do have an imbalance right there. So I paid attention to that imbalance right there. And I made sure that that imbalance was going to be an area that the market was going to respect. Obviously, if it accumulates, it has to reaccumulate. And that's exactly what we wanted. Like I said, as you guys can see, market was coming down bearish momentum, creating low, high, low, high, low, high, low, high, low, high, low, broke structure. What could you have done was use the fib from the previous low to the most recent high right then and there. As you guys can see, this is New York Open. That's what these are. So the John fib and London and Open, London and New York Open is basically when London session opens on the light blue, and then when New York session opens on the dark purple. Obviously, for experienced traders, we know that London and New York both they both stack up with each other. So but I pay, like I said, I pay real close attention to the New York Open. I believe it's 9:30 in New York. I'm in Central Time, so for me it's 8:30. But like I said, you use the Fibonacci from the previous low to the most recent high, and like I said, I go based off of the 786. As you guys can see, the market literally wicked in there. If you go ahead and put a long position on there, yes, the stop loss is 100 pips. That's something that I didn't want to get into because of that. But like I said, if it happens once, it has to happen over again, and it can even do it a third time. So going down to the 1 minute, paying close attention to that, you can see that the market literally did it all over again. It came down, created a low, high, low, break of structure right there. You can use the fib right there from the previous low to the most recent high. And what happened right there? It came in and hit that 786. 786 thing. It's right here. 786 right there. So now if you're, let's say you did miss this opportunity, that's totally fine. It happens. Sometimes we get busy doing stuff. Sometimes we just don't catch it the first time. So like I said, it'll happen again. It'll come in and they give you that second entry. And look at that stop loss. A lot of people can come down here. That's still a big stop loss, but you have this low here that was created where you could have set that stop loss right there. And that's 23. That's a 23 pip stop loss. Obviously 23 pip stop loss, depending on your lot. You could have, honestly, I mean, the risk to reward was there. So 1 to 37. That's crazy. The ratio. So that's the trade that you want to look for when you come into the markets. Honestly, always wait for evidence. I know a lot of people would have gotten in here. I mean, you could have gotten in there when it said that, but let's say you did get into that area when in the imbalance area. I mean, if you would have got right when it hit that imbalance, your stop loss would have been here. That's 184 pips. That's not what you want to do. Obviously, you guys saw that this is a big stop loss too. It's not something that you want to do. Obviously, use your right risk to reward, especially with US30, because I mean, 100 pips, that can be somebody's account. But yeah, you risk 28 pips to make currently running 830. The market is closed. It's Saturday, but like I said, I don't see it coming back down to anything. It already came down and it swept those lows. I mean, and then pretty much it already did break structure. So what I see going after that break of structure, it came down, reaccumulated down here. So I mean, if I know some of y'all who watch my videos have gotten into this trade. I mean, if you're in it, you can hold it literally until I mean you have an imbalance up here. That will be an area where you want to wait and wait to get wait for the market to get to, and then from there, obviously, like I said, it's gonna come and create a new all-time high because that's what it does. This with all-time high, this came and became the new all-time high. This is currently the low. It's gonna come up here and create an all-time high somewhere around here. So I mean, if you missed the opportunity to get into that buy, like I said, going down to the 5-minute, looks like market can come back down just for a tiny bit and take off. I mean, there's an imbalance right here that can come and get swept before it takes off. And if that's the case on Sunday or Monday when it opens, then that's totally fine. But that's something that I'm looking for. Obviously, you can swing that trade that you have, obviously going from where you're at now. I mean, you're looking at, I mean, it's a crazy risk to reward, honestly. You're looking at around almost 3,000 pips. So I mean, if you can get into another re-entry right here, hold it along the way. Like I said, market, in order for it to be healthy, has to create highs and lows and highs. If you can get into the market while it's basically moving up, then that's totally fine as long as you can still swing that one. So swing this one in the background, take trades within daily, and I mean, this is where your profit's gonna come from. Obviously, you're gonna make profit along the way, but your real money is gonna be right here in those swings. But yeah, that's pretty much it. On what I wanted to tap into, just because it's in an area that I basically knew the market was gonna get to. But thank you guys for watching. If you like the video, go ahead and like the video, subscribe, and I'll try to upload more videos more often. I do get a bit busy, but like I said, subscribe and I'll be uploading more videos soon. So thank you guys for watching, and I'll talk to y'all later.